Hello traders, Gary Wagner here, just after 10 o'clock in Honolulu, after 4 o'clock in New York, on Tuesday, the 15th day of October 2013, the 15th day of the partial shutdown with the U.S. government, 2 days before we hit our deadline on the 17th, and this is the daily report for gold and silver. We do have moderately higher pricing in both gold and silver today. Currently looking at a 30-minute gold chart, call it 1281, puts it up about $7-8 on the day, the high 89.40 and the low 51.50. Silver on a same 30-minute duration, trading up about 8 cents on the day, 0.38% higher, low 20.43, high 21.63. You know, we have seen this market climb considerably over the last few trading days. We have seen a dramatic rise from the negative pricing that we saw as this market opened. You can see this low at around 12.50. Here is our highs right in here. But the market has virtually, as there was a breakdown in the current talks 2 days to go, you can see the market truly had a nice little rally and kind of stalled in this area. Looking at a Japanese average chart, you can see that at this point, the body sizes have gotten very small. We also hit a resistance area that we'll talk about in a second. The other thing that I do want to look at before I put that chart up is I do want to remove the study of Japanese average so that we can look at straight candlesticks, which has our true opens, highs, lows, and closes. When we take a look at this particular 30-minute chart, comes up, it absolutely hits resistance, and it's followed by a red candle, very small green candle, and this is just beginning to form. So we could be looking at a scenario in which we're getting these slight pullbacks as we get closer and closer to deadline. We get a kick, we get a pullback, we get a kick, we get a pullback. Now, the one thing I was thinking about, do we want to enter this market at this point, 2 days down? Right now, we've got 1 day, 7 hours, 34 minutes left. Dow is down about 133 points today. S&P's down about 12 points today. But I want to draw your attention to the following chart, and that is this daily chart. As you recall from yesterday's show, we looked at a former support line that I believe now will become resistance. We talked about the fact that we basically pegged it off of these two lows as the market went up, our ABC, and then came down. We also talked about the fact that it broke below it. And here's the thing, in today's marketplace, this really is a hammer when we look at it in terms of the straight candlestick that is forming. But as I looked at this market trade today, and as it hit those highs, let's go ahead and blow that back up so you get a better indication of what I'm talking about. But as this market traded up, it absolutely stalled right at that resistance point. You can see the high right here, and the market is backed off. It's still trading. It's a green candle, so the current print is right here. This is the opening of the day. This is the low of the day and the high of the day. My sense is right now that as we get closer to the actual deadline itself, if we get an utter breakdown, and we are at an impasse at this point, but we'll see what happens. There is going to be another meeting between the president and members of the House later on. But I would look to be a buyer on a breakout above this line and then placing a stop below this particular currently resistance trend line that would become support if in fact we got a really strong market moving to the upside. Now, there can be no doubt we have the fundamental factors in the market that could truly move it in that direction, but I'm still hesitant because we could see this market take off. An 11th hour compromise comes in, and then we could see this market literally get slammed. And that, of course, that kind of volatility is something that we want to kind of stay away from. At the same time, if something is passed, we will probably get a continuation of the downtrend. That's what we've been talking about, and that's what all of the technicals have been pointing to. But for the meantime, I really want to see the market break above this trend line here before I consider it a breakout. I've simply gone and compressed the chart so we can see this dramatic fall from grace, so to speak, and the fact that we are currently trading, as I said, just below or underneath this particular support line, now resistance line. However, on the bull or positive side of the fence, we have to take a look at our fib retracement. Fib retracement that we're working with is a simple fib retracement from 1180 to 1235 and a 61% retracement. That number is 1274. We are currently well above that number at 1281. And effective closes, and we had our New York close roughly in this area, that to me is fairly bullish in terms of the short term in the marketplace. So although we are still underneath this particular trend line, we are above our 61% retracement when we look at our daily chart and put in a fib retracement from the last real rally. Now, of course, traders, I talked about the fact that the real issue in terms of technically looking at this market and the resistance that it has had is this upper level resistance line, this trend line that we can draw in simply by looking at the series of lower highs as the market moves down and then basically extending the line. For us to see a bona fide real breakout, we're sitting at 1280, we need to absolutely break above this particular trend line that by the slope down and the angle up would put it at around 1300. So we talked about the fact that there is a resistance area. Let's go ahead and pull that chart up real quickly. But we talked about this resistance area currently that we need to break above. Market's currently at 1280. We talked about that. But then the big picture is still got to be this resistance line that is coming in based on these series of tops that have consistent lower highs. At the same time, where is support in the market? Well, we have genuinely seen a series of lower lows. And so we don't really have any kind of major support. We have a couple of areas that should hold, and 1260 to 1270, let me try to straighten this as best I can. Based upon this low, and we've talked about that, let's bring up a chart that illustrates that a little bit better. And really the the bottom that we're talking about is this right here. And of course, again, that corresponds to 1274, 1275, or our 61% retracement. If the market can stay above this point, that's a great sign. But we still need to be able to break out above this particular resistance area before I really felt bullish about this market. And up till now, I have not seen that. Now, the fact that we have stalled in terms of negotiations in the U.S. government, and the fact that we are now 2 days from what they call the deadline, the 17th, and now they're beginning to kind of backpedal on that. And I believe the reason they're backpedaling on that is because they believe that there has become a real threat, a much higher probability that they won't reach a compromise. And as I said, that changes almost moment to moment. But in terms of upper levels, and it's nothing that I'm really concerned with as of yet because the pressure is still to the downside. 1241, that should be absolute support. 1241, of course, is a 76% retracement. 1278 to 1275, market's currently trading above that. That's our 61. That is critical support. Next levels of resistance, of course, are going to be 1300. Again, we want to take a look at these tops. Of course, I haven't drawn them in quite properly, but we'd have to see a breakout above that before I got bullish overall, because right now, as far as the big picture goes, I'm still bearish on the market. We're looking at a weekly chart of the continuous contracts COMEX silver, Japanese average format. When we look at this chart There's no doubt. On a weekly basis, we could see it hit the top at 25. As this market has been in a decline, though, we have identified the fact that it has been able to maintain itself above the 61% retracement point. Same type of retracement in terms of it's really looking at the last rally that corresponds to gold going from 1181 to 1435. That's this move up in silver. Unlike gold, though, it did not dip below this particular support line and has effectively been able to trade above it. Now, that is a weekly chart, and it's also in Japanese average format. To get a more true sense of what we're looking at, if we go to our daily chart, you'll see that, our weekly chart in candlestick format, you'll see all of these down weeks, but you're also getting real consolidation in the market because you're getting week after week where you have defined ranges, but the market tends to close roughly in the same place that it is open. Now, when we look at this last week in terms of silver, it is basically unchanged, but it's slightly red. And when you compare that, of course, to our weekly chart of gold, it is a small bodied candle, but it's, in terms of its size and in terms of its color, it does seem more apparent that it's attempting to kind of springboard off of this 61% retracement level. Now, House of Representatives is going to vote tonight to reopen the government and to avoid any kind of default. And as long as that looms as a possibility, the pressure still could remain on the downside in the precious metals markets. All bets are off, of course, as we go into the beginning of the deadline to raise the debt ceiling. This has been Gary Wagner, wishing you, as always, good trading. We'll talk to you tomorrow on Wednesday for another daily update and review. Bye-bye.